This is Bruce for Spartan Capital Markets, taking a look at the weekly technical market report for Sunday, June 25th, 2023. We start out with the with the Aussie dollar, and you can see how the Aussie dollar found resistance at last week's high, turned back down and retraced all the way back down to support of the downtrend line where it is held support. So that's a good line. The market is identifying that line. You can see how the RSI was overbought at the high. So maybe some more retracement is possible, but certainly a bounce first could happen. So hard to say at this point. We know what support is anyway, and we know what the high is, and we have a pretty good distance within there. So there's probably some trading volatility going to happen within a bounce around off of this low. Moving on to the euro dollar. Euro dollar also found resistance last week at the 78.6% Fibonacci, sold off pretty hard at that point, found support at the 38. So we have a retracement at least to the 38, could go further, probably at least chop around for a little bit before it's ready to continue higher, given the reaction off the 78% retracement. So we want to watch both ways at this point, either long or short, depending on what happens next. We'll have to really need some more information on this one to see what might be happening next on it. That's the euro dollar, and also the euro dollar is the one where I have a 4-hour chart as well, because this expanding triangle can be shaded on a shorter time frame, and you see on where we found support at the bottom line, and the 100 period and 200 exponential moving average is period, in this case 4-hour period. So it looks like some higher bounce is probably likely in the short term on the euro dollar. Following the euro dollar, we have the euro yen. In the case of the euro yen, we got a real strong move. This chart right here and these marks of this measure move and these measuring objective for the symmetrical triangle, these were here before 2-3 months ago when this was first talked about. And you can see how we reached this first target here of this measure move last week. So last week's high completed the measure move where from this low to last week's high matches the distance from this low to this high, which was at the beginning of the move higher, and which was an impulse move. So we also have characteristics of an impulse move here. And so that's where that measure move comes from. Now, there's no sign that resistance is hit and that we're going to pull back, so we certainly can go higher to the higher target, which is for the symmetrical triangle measuring here to here and adding that on from the breakout of this line up to that target. So we'll have to see strong momentum, increased likelihood of retracement, but no sign of it yet. Until that happens, we assume it goes higher. Following that, we have the dollar yen. And in the case of the dollar yen, also similar behavior. You see how we broke through this resistance zone, which includes a 62% retracement, and completion of an A, B, C, D pattern, and closed above it. So not only did we break above, we closed above it, and we closed high at the top of the week's range, all bullish. The only thing is we are hitting potential resistance of this top trend line here, which is a parallel of this lower line and is part of what is now a rising wedge, where we have these two angled lines coming together, showing potential momentum to die out at some point and price to turn back over. It's still developing, so it's not telling us too much yet, other than we're hitting this top line, which is potentially a resistance level. So let's see what happens on this. A decisive rally above last week's high shows that the bull is continuing, and then signs of resistance that leads to further weakening indicates that that's probably what we're heading into at this point, some type of retracement. Now we move on to Hathaway analysis, where Scott Hathaway uses some of his unique geometric charting techniques, harmonic charting techniques, to look at a couple instruments, the first one being the US dollar. In the case of the US dollar, we've got nice support at last week's low, and that support is expected to hold for a bounce and probably exceeding this previous swing high here and this previous swing high here, possibly as well. At the same time, if we break that low, then we're going down here to roughly, this is 100. If at this point in time it's 100, right? So if we hit it earlier, it's going to be below 100. And then this lower angled line down at 98. So these angled lines have relationship to previous price action and to each other. So you see here on the 22.88 degrees, 1, 2 here, 1, 2 hitting, and this is how we get the support levels at the angled lines, and then connecting them up to have it to show a relationship with previous swing highs and lows and previous angles. That's the US dollar index. And then finally, we've got gold, and gold, which continues to retrace, frustrating the bulls. Not so easy on the short side either, because it's coming down relatively slowly. Nevertheless, we're pretty close to key support zone at 1909. 1909, that is where support at a maximum should be seen, leading to a bullish reversal and subsequent rally. You can see how, depending on when and that's where the intersection of this 7/24th rising line and the 7/12th falling line intersect with each other. And that's how that is derived. At the same time, depending on when we fall, so we go sideways for a few more days, and then come down, we should find support at the 7/24th line before hitting the 1909. So the 1909 low is the maximum low anticipated on this retracement before we get some support that turn gold back up. That's it for this week's newsletter. Traders, have a great week.